Okay, so you've reached that point in your life where you want to move on to the next house, whether you want to downsize or upsize because your family is getting larger, but you have to sell first before you buy. And that is a dilemma that most people are in. And quite honestly, a lot of people don't do anything because they're fearful of being homeless, not a lot of inventory on the market. But did you know that there are a lot of programs out there that can help you and your family buy before you sell? And we're about ready to talk about that. So my name's Paul Obrantz. I own Clear to Close Mortgage Brokers. For the next 5 or 7 minutes, we're going to do a high-level overview of some of these amazing programs that's going to allow you to buy a house, then sell your existing house. Keep in mind as we go through, not one program is meant for everybody. Each program is going to have its weaknesses and its strengths. What we need to do to determine which program is best for you is do what's called a hopes and dreams conversation. On the other side of that picture, there's my QR code. Hopes and dreams conversation. We do not pull credit. We do not take applications. We're just going to go through your goals and we're going to put a plan in place for you. We're going to narrow down these options. I'll tell you why programs are better for you than others. And the ultimate goal is we're going to help you save as much money as possible through this transition, whether downsizing or upsizing, so your family does not feel homeless. No one wants that feeling. All right, let's keep going. Who is this for? So this is the dilemma. You want to move, which I guess we have to establish that. There's got to be a desire to move. Whether you're relocating or your family's getting bigger or the kids have moved out, now you want to downsize and you have financial constraints. Maybe you can't qualify for 2 mortgages from a debt to income ratio standpoint, or just the fact of making 2 mortgage payments in today seems overwhelming. And that's something you don't want to put yourself in a position to. I mean, 1 mortgage is bad enough, let alone 2. Or the third option would be it's a competitive home. In some instances, you probably could get your offer accepted pending on you selling your house. We're seeing that a little bit in this market. But here's the thing. If this is your dream home, it's probably someone else's dream home. And if the house is priced right, you may not be able to have the luxury of selling first and buying. And you may need to utilize one of these programs, which is the great news here. Let's first talk about bridge financing. Bridge financing is by far the easiest. I'm going to go in and out, by the way, so you can see these slides as I kind of go through them. And what bridge financing is it utilizes the equity in your existing home and the home that you're going to buy. And what it does is based off the equity, it's a private loan. They'll loan you the money. You can literally treat this as an all cash offer. This is exceptional when it's a competitive market. You're able to remove loan and appraisal because there's no loan or appraisal contingencies. It makes your offer super, super competitive. Some of the disadvantages is that the cost of these loans could be upwards from 2 to 3 points, and rates are 9.9 to 10.99% interest only. And they have a 12-month term. So the idea is if you utilize it, you really want to save on the purchase, or you don't want to lose the purchase, but you want to get your house sold and paid off as quickly as possible. So let me give you an example of how this works. Let's say you want to buy a new home at $1 million and your current home is worth $1 million. I get it. It's probably not going to happen that way, but I love easy math, and let's make this simplified. So the combined value of the 2 properties is $200,000. Now the max they'll lend is 65%. Now, this is not all bridge financing. Some will go higher, some will go lower, but for the ones that we basically use that will allow for speed, cash offers, etc., it's 65%. So in this example, what you'd be looking at is 1.3 million, and then from there they subtract any loans, that's any first mortgages, second mortgages, any leases or anything like that, like solar leases. And then from there, that will be the amount they will lend you for your next purchase as cash for your purchase on your new property. Great program. We use it a lot. Something that should definitely be considered in a highly competitive environment when speed and contingencies are key. The next one is cash as income programs. This is something that very, very few people know. So let's say you're okay. This is for the families that are okay holding 2 mortgages, but they don't qualify from an income standpoint. Did you know that there's programs out there that can literally take your assets, Let's say you have about 500,000 and you divide it by 36, they will use that as income. And a lot of times that will get you over the hurdle of qualifying for both mortgages. It's an excellent program. We've used it a few times. It's a lot less costlier than, let's say, a bridge loan. But remember, you have to make both payments on the first mortgages until you sell your property. So let me give you a quick example, although I already did, real world example. If you had 500, oh wait, what assets can we use? Oop, I almost forgot about that. So this is the best part. It could be retirement accounts, and you don't even need to be of age. It could be checking, savings, mutual funds, savings, all that stuff. And then what they do, there's certain formulas for each asset type. And then you take the total amount that it's allowed to use, you divide it by 36, and there's your income. Huge program. It'll save you a lot of money and get you qualified. Right along that lines is number 3. It's a 401k IRA distribution. Now, remember, you have to be of age to be able to create IRA distributions. But what this allows us to do is very similar to what the cash program does, is take your 401ks and create what's called IRA distributions. Those IRA distributions we're allowed to treat as income, again, assuming that you don't have enough income as it stands to qualify for both mortgages. Now you can use your IRA, create a monthly distribution, and qualify for the mortgage. The cool thing is after you close on the loan, you don't necessarily need to take that IRA distribution anymore. What's important to the lender is that when we close the loan, they have satisfied the income requirements as set out by Fannie and Freddie Mac to get the loan approved. What you do after, it's totally your business here. Let me give you an example. Let me blow this picture up if I can find there she is. If I can find my mouse. Example, you have an IRA balance of 500,000. One of the keys, though, that people need to know is that whatever amount of distribution that you create, you need 36 months of it. So typically what we do is we take your balance, divide it by 36 to get the maximum amount, and that will allow us to see what your maximum approval is. So there it is. Set up a 3,000 monthly distribution. Lender confirms there's 36 months available, adds that $3,000 to your income. There you have it. All right, let's move on to number 4. Now, this is kind of a two-part thing. A lot of people, they may not want to sell, they may want to rent, or they're just in a holding pattern. They're not quite sure. So under Fannie and Freddie Mac guidelines right now, in order to use rental agreement on a departing residence, a few things need to apply. What we're going to focus on here is you need a signed lease agreement and one of the two, a deposit check, cash in your bank account, or a rental appraisal on your property. That kind of tells the lenders what the fair market value of the of rent value is in your neighborhood, and they want to make sure that it's in line with what you're leasing it for. Now, if you're unsure what you're going to do, maybe you are going to rent it, maybe you're not, or maybe you just haven't found anybody that will sign a lease agreement and give you a deposit check that you can cash. There's other programs out there that will allow you to use the rental estimates, let's say on Zillow, on Rent-A-Meter. You don't need a lease agreement. You don't need a deposit check. It's as simple as looking online, seeing what the value of a projected rent would be in your neighborhood, and they'll use it. You can offset that to against your mortgage payments, which will help your debt to income ratio. This is really for people that need rental income to qualify, and without it, their debt to income ratios are too high for the loan to be approved. But this will allow for the debt to income ratio to be in line, because now you can use, let's say, Zillow's rental estimate and offset that against your mortgage payment. Absolutely amazing program that a lot of people don't know. They think you actually need a signed lease agreement and a deposit, which you do for Fannie and Freddie Mac, but not for everybody. So this is the 5th and final one. We're going to spend a little bit of time here. There's so many different programs here with these non-contingent and what we call like trade-in programs. So let's start with non-contingent offers, right? So if you're in a situation where you have money for the down payment of a house, but you don't qualify for both mortgage payments from a lending perspective, If you receive a non-contingent offer on your property, or if you receive an offer with loan and appraisal contingencies that have been removed, lending from Fannie and Freddie Mac, we no longer have to include that mortgage payment in our debt to income ratio. So therefore, you would only qualify on the house that you're buying, and you would qualify. So that is something that's really important to know. So building off of that, these programs have come along and said, hey, I tell you what, and one in particular is called HomeLight. What do you say that I make a non-contingent offer on your house, assuming you can't qualify for both mortgages? And what we'll do is we're going to loan you a portion of your equity for a down payment at 0% interest. Sounds like an amazing program, which it is, but there are things to know about HomeLight is that although they give you a 0% interest on your the money that they loan you for your down payment, when you sell your property, they're going to charge 2.4%, which is kind of hefty if it's not the right program for you. The third option is called Bridge-to-Sell. This is a really cool program. This just focuses on your current residence. So let's say, for example, again, you can't qualify from a lending perspective on the departing residence mortgage and the house that you're buying's mortgage. So you need to get rid of this house. This program, what it does is it loans you up to 60% of the value of your property, but it has to pay off your first mortgage, and then it also collects 12 months of payments up front. So that's included in the loan. And then any excess minus fees will go to you for the down payment or whatever else you want. Now, you don't have to make a payment for 12 months. Let's say, for example, you sell your house in 2 months. What happens to that 12 months of payments? Well, 10 months will be refunded back to you. So you don't lose that. They just don't want you to have a mortgage payment on this. So when you go to buy your new home, they don't have to include that in the debt to income ratio. So it's a really cool program. The interest rate's 8.5%. It's interest only, and no payments are needed to be made. And it just allows you to tap into your equity. So like HomeLight, Bridge-to-Sell, it really depends what your short-term and long-term goals are, which ones are going to be better for you. So there you have it, you guys. There's 5 amazing ways to buy before you sell. And truthfully, that's not really all inclusive. If you're serious about making a move and you don't know where to start, we talked about this in the beginning of the presentation. Let's schedule a strategy session. There is a QR code right there. If you go ahead and click that, that will bring you to my website. Just pick a time that's good for you. No obligations. You don't need to use me long term, but you get to use me for my knowledge of 20 years of doing this. Let's put a plan in place for you and your family to save money, to maximize, and get you to buy your dream home before you have to sell. So with that, I think that's a wrap. My name's Paul Obrantz. I own Clear to Close Mortgage Brokers, and I look forward to hearing from you.